In 2026, the biggest money moves will not be announced on CNBC, they will not trend on Twitter, and they will not be obvious to the public. While most people are chasing yesterday's stock winners, the wealthiest investors in the world are already repositioning their capital into entirely new sectors that will dominate the next decade. These shifts are not based on hype. They are based on government policy, technological pressure, and massive supply chain changes that are already happening quietly behind the scenes. And the people who spot these shifts early don't need to find the next Amazon or Bitcoin. They simply need to be positioned where money is flowing. Why small returns create massive wealth? Most people think wealth is built by finding one lucky investment, one stock, one crypto, one breakout company. But real wealth is built very differently. It is built through compounding. Imagine two investors who both invest $1,000 every month for 30 years. One of them earns 10% per year. The other earns just a few percentage points more at 13%. The first person ends up with just over $2 million. The second ends up with almost $4 million. That extra 3% did not come from gambling. It came from being positioned in the right parts of the economy at the right time. This is why wealthy investors do not chase what is already popular. By the time something appears on mainstream media, the early profits are already gone. The real money is made when capital quietly moves into new sectors before everyone else notices. That is what we are going to look at now. The new economic map of 2026. The United States economy is approaching $30 trillion in size, but not all parts of the economy grow equally. Some industries stagnate, others explode. The goal is not to predict which company will win. The goal is to understand which parts of the economy are being structurally forced to grow. In 2026, 5 major shifts are shaping where capital is going. These shifts are driven by geopolitics, artificial intelligence, national security, and changes in how the modern world functions. Let's start with the one that most people don't even realize exists. Shift 1. America's mineral crisis. Almost everything modern life depends on requires rare earth minerals. Your smartphone, your electric vehicle, your military systems, your data centers, even renewable energy infrastructure. For decades, the United States relied almost entirely on China for these materials. That worked until it didn't. In 2025, global politics changed the equation. China began restricting rare earth exports. That created an immediate vulnerability. Without these materials, factories stop. Technology production slows. Defense systems become harder to build. In response, the U.S. government moved aggressively to rebuild domestic mineral supply chains. Executive orders were signed. Billions were allocated. The goal was simple. America must be able to produce its own critical materials again. This created something rare in investing. A brand new industrial expansion. A supply chain that barely existed in the U.S. is now being built from the ground up. Whenever a new industrial ecosystem forms, capital follows. And this is why minerals are one of the biggest hidden money shifts of 2026. Shift 2. The cybersecurity arms race. The cloud changed everything. Businesses no longer store their secrets in filing cabinets. Governments no longer protect their information behind locked doors. Everything now lives inside data centers. Then artificial intelligence made it even more dangerous. In 2025, companies began pouring their most sensitive data into AI tools. Legal documents, customer records, financials, trade secrets. Every new AI prompt became a potential security risk. At the same time, governments realized something terrifying. Cyber warfare is now as powerful as physical warfare. One successful attack can shut down power grids, banks, hospitals, or military systems. That is why cybersecurity is no longer optional. It is national defense. Governments are now funding cybersecurity the same way they fund the military. Corporations are forced to spend more just to survive. And whenever protection becomes mandatory, money follows. Shift 3. Energy enters a supercycle. Artificial intelligence does not run on magic. It runs on electricity. Every time someone asks an AI model a question, thousands of servers light up. Multiply that by billions of people, businesses, and machines, and you get an energy demand explosion. This is not theoretical. Data centers are already consuming enormous amounts of power, and demand is expected to double within just a few years. At the same time, U.S. energy policy is shifting. America wants energy independence. That means more domestic oil, gas, and nuclear production. Green energy is still part of the mix, but traditional energy and nuclear are returning in a big way because AI requires reliability. Data centers cannot afford blackouts. Energy is becoming the backbone of the digital economy. Shift 4. The hidden biotech supply boom. When most people think about biotech, they think about miracle drugs, cancer treatments, weight loss injections, Alzheimer's breakthroughs. But the real money in biotech is often not made by the companies that invent the drugs. It is made by the companies that supply the tools needed to deliver them. During the pandemic years, biotech companies overordered everything: syringes, vials, tubes, injection systems, lab equipment. When demand cooled, warehouses were full, orders stopped. This phase was called destocking. For almost 2 years, the industry barely bought anything new because it didn't need to. But that phase is ending. By late 2025, major pharmaceutical suppliers publicly confirmed that biotech companies were starting to order again. Analysts across Wall Street confirmed the same trend. Inventories were finally being used up. New demand was returning. At the same time, something else changed. Medicine moved into people's homes. Drugs that once required hospitals are now self-injected. Weight loss treatments, immune therapies, even Alzheimer's medications. Millions of patients are now giving themselves injections every week. That means millions of syringes, millions of needles, millions of vials, millions of delivery systems. The future of biotech is not just about drugs. It is about the massive supply chain that delivers them. Shift 5. The infrastructure behind artificial intelligence. Most people think the AI race is about software, chatbots, image generators, smart assistants, but the real battle is happening underneath. Artificial intelligence runs on physical infrastructure, massive data centers, powerful semiconductors, cooling systems, electrical grids, fiber networks. It does not matter which AI company wins, all of them require the same backbone. This is similar to the internet in the 1990s. You could try to pick which website would win, or you could invest in the companies building the cables, servers, and routers that every website needed. In 2026, governments and private companies are pouring billions into AI infrastructure. New data centers are being approved faster. New energy projects are being built. New chip factories are opening. The United States even declared AI a strategic national priority. That means capital will continue flowing into the physical backbone that supports the digital future. The bonus shift. Robotics enters the real world. For decades, robotics lived in science fiction, but now it is becoming a business reality. China already operates factories with almost no human workers. Robots assemble products in the dark. No lights needed. No brakes required. The United States is racing to catch up. Warehouses are being automated. Hospitals are using surgical robots. Restaurants are using robotic kitchens. Delivery systems are being automated. For years, robotics was expensive and unprofitable. But in 2025, financial analysts confirmed something important. Robotics is finally approaching profitability. When machines become cheaper than humans, adoption explodes. That creates another long-term capital shift. Some investors focus on robotics companies directly. Others use ETFs that hold dozens of firms building automation systems, AI-driven machines, and industrial robots. If you want to stay ahead of where money is moving, make sure you're subscribed, share this video with someone who cares about their financial future, and drop a comment below with the sector you're watching most closely in 2026.